Welcome everyone to our weekly live session as usual. The date is Saturday, November 13th, and we just came off a pretty good week. Really good, a lot of good plays, much better movement in the market. From what we saw, better risk reward opportunities. You could see, we were quite more active in the market this week, specifically. A lot of earnings, continuing, pretty big week in, Tesla as we kind of got the first week after the Elon tweet, which was exactly last week on Saturday, I believe. So we saw some selling. I'll cover more into that later on in the live session, but just a great long play. We've got a lot of good plays. We got a good entry in Tesla Leaps. Been playing Tesla up and down on the volatility and the kind of increased volume throughout the week. So pretty good. Predicted that major down 10% day, or sorry, 12% in a single day. As I mentioned, it was a little bit odd when I saw, investment banks, about 3 different investment banks with 4 different analysts, choosing to upgrade Tesla on the day of or day after Elon's tweet, which was pretty odd. So I mentioned that I thought it was a little bit fishy because with these analysts, they're more conservative and very conventional, so they don't like risk at all. With Tesla, it's, I think, um, a bit of a kind of bittersweet stock for analysts, because it's such a powerful stock, powerful company with so much upside, but in their eyes, there's a lot of risk because there's uncertainty with the CEO, who Elon, who kind of does his own thing, and I think people on some of the kind of quote unquote suits on Wall Street that are more conventional, don't like risk, and like to follow the book, don't like that uncertainty. So I think that we kind of saw, in my opinion, kind of a look to kind of exit some, so at least for the short term, in my opinion, while Elon sells. So that's what I think we saw on Tuesday. In addition to Elon selling his shares as well, we saw about 3 million shares sold that day. But I don't think that accounts for all the volume, because he did sell 1.5 million, I believe, on the past day, and we saw about a 2% move. So yeah, but I'll cover that later on. Upcoming this week, we do have quite a few earnings. This week I didn't enter any earnings plays, as I usually do over the weekend, which are always seem to be really good, performing well. But I was a little bit more occupied. We had a lot of plays this week, but I think some good ones to hold over the weekend would have been Nvidia, Target, and Walmart. But not a big deal. I'll watch them on Monday. But quite a few earnings that are pretty notable. The ones I'll be watching: Lucid on Monday after hours. So they'll be reporting. Casper's one to watch. Home Depot, Walmart, all JMIA, all reporting Tuesday pre-market. Then another Walmart competitor, Target, reporting Wednesday pre-market, so a day after. There's also Baidu, Lowe's, and Bilibili. So some 2 of the Chinese companies in there. Pretty big companies, both of them too, Baidu and Bilibili. After hours, Nvidia, Cisco, Sonos will be on watch. And then Thursday, Alibaba pre-market, JD.com as well, pre-market. And then after hours, we have in the cloud sector, Workday, and reporting on Thursday after hours. So those are some of the ones I'll be watching. More of a focus, in my opinion, on likely Walmart, Target, Home Depot, Nvidia. Maybe watch Baba for a move on earnings, and we'll be watching Lucid as well. Might play that short term based on the earnings. So I'll update you guys on that. That's Monday after hours. But yeah, other than that, really great week. Tesla pulling back a little bit as we saw throughout the week, so not too bad. I mentioned, that $1,000 level will kind of act as key support, especially because it's in the $1 trillion mark. As I put in a message in the group, when we enter that $1 trillion mark, it kind of acts as a really big milestone, because entering the $1 trillion mark isn't really too by accident. I think people kind of realize this is a $1 trillion company. So to fall under it, I think it'll take a lot of movement, but I think we can fall under the 1,000 support mark, but it will act as a key support for the short term. So, but regardless, plan stays the same. I'll cover it a little bit later on, but we'll continue adding to leaps and shares as we drop, and just more of a long-term play. As I mentioned, I think this can go really bullish, make a really bullish move, large move to the upside, and really break out. I think the short interest is continuing to rise, and those shorts will definitely be trapped. I think they're weighing in too much on Elon selling when realistically, the basis of it is like he said, for tax purposes, and he is acquiring more shares, as we saw in the SEC filings, the Form 4s I sent into the chat. He is acquiring more shares through the exercising of options. So he's using his options to acquire shares while selling, to retain cash to pay the tax bill on acquiring those shares. So essentially, he's actually kind of obtaining more shares through this process. So, I think the shorts will end up getting trapped, and a lot of upside there. We had a great play as well. Ending into the week, GGPI, really running nicely. I'll touch on that as well, but I think it can definitely get quite a bit of traction over the weekend, especially with the 2-day move. Sorry, not really 2-day, but the move throughout the day and into after hours as well. So watching for that on Monday. Really nice move there. I'll touch on that a little bit later on as well. And then a couple of other plays that moving really well this week. So just a great week. So I'll just pass it on to DJ for now, who will go over his usual SPY analysis and share his thoughts.
Yeah, so pretty good week overall. So another good week. It's been a pretty good last couple of months, I think. Just a lot of volatility in the markets and volatility creating a lot of good opportunities kind of throughout the past little while. So there is a little bit more in my screen today, as you guys can see, but I'm not going to be covering the majority of those too in depth. Pretty much they're just a whole bunch of tickers in the marijuana space, kind of related and correlated, which I'll kind of go over quickly near the end. I do think we've reached the seasonal bottom on these stocks, so I do think most of them should continue higher heading towards the end of the year and into early next year. But anyways, get started with SPY. So this is actually a pretty important week for SPY. What we saw was a breakdown below the daily EMA, a retest above it on Thursday, in which it kind of gapped over it and kind of held right on. But Friday was actually a pretty important day where it was kind of unclear if we would, kind of gap down and test the daily Bollinger Band and see further continuation down, or we would, shoot right back above the daily EMA and hold the uptrend. So the fact that we had a bullish day on Friday now puts SPY in a pretty tight range heading into next week, pretty much. So what we're looking at, pretty much, it's the all-time high and the low of Wednesday on SPY, and anything else doesn't really matter too much. I mean, the key levels, all-time highs, which is around 470 point something on SPY, and the low of Wednesday, which is around 462. These two levels, pretty much, if you break either direction, it's just gonna shoot up or shoot down quite significantly from here. And this isn't a very large range. It's it's less than I think 10 points. It's around like a 8 point range, which is about 2%. I anticipate, just because of the high volatility we've been having for the last couple weeks and last month or so, that we will break out this range next week. Like 90, probably 95% sure we will break out of this range. Whether it's an all-time high breakout or a retracement to retest and break the low, it's unclear for now. I am leaning towards an all-time high break, but not by much. I think it's very much like 60-40 at best. It's quite 50-50 in my opinion, but I'll give it 60-40 just because we managed to retake the daily EMA on Friday. That's pretty much the only reason I'm going to lean slightly bullish here. And because of that, many stocks in the market on Friday rebounds above their daily EMAs as well, and had quite a rally. So I think that just favors the bulls just a little bit, but not really too much. I think it's quite unclear for now. Monday will be pretty telling which direction it goes. If we end up having a green close on Monday and quite a strong move up, we could see all-time highs as soon as Tuesday, and vice versa. If we have a red day on Monday, we could probably retest the lows and see a test of the middle Bollinger Band or further below. So pretty much what we have is we have this move up, this bounce down, and now we're kind of unclear, and either we will kind of see this move down, and this will be quite a bit of a correction. I wouldn't say too big, but if we do break the low of Wednesday next week, we will probably see at least a 3% correction, in my opinion. There's a total lack of support, and it not only will we be rejecting the daily EMA, which has been held for like the majority of the past month and a half. If we do break the low of Wednesday, it's very likely we will actually break the daily middle Bollinger Band as well. As kind of, if you follow the slope here, it's going to rise to around this area, which is going to pretty much intersect and match up with the support. So if we do end up breaking the support here, we'll be dropping the daily middle Bollinger Band, which is not something that has happened since like a month and a half ago. So I think that will kind of technically spiral everything into a bit of an algo downtrend if that occurs. So I think Wednesday is very important heading into next week. This thing has to hold, otherwise markets will cool off for probably a week or two. But for the bullish scenario, pretty much anything above the middle Bollinger Band is considered a higher low, and then if you break out, there's no top, and you just keep going higher, and it can go to as high as it can and keep on pushing. Especially after it's been in sort of a flat consolidation phase. If we break out, it will be a pretty aggressive move up, and everything will push to higher highs. Weekly chart on SPY. As we see, we have 5 green weeks all the way to the top of the weekly upper Bollinger Band. We closed this week slightly above the weekly, but we did have a red week, so not the greatest of signs on the weekly, because typically a red week in the past, once it's overbought, seems to trigger some sort of pullback towards the downside to kind of cool it off. like I said last week, we don't have too many weeks above the weekly upper Bollinger Band, just in general history. So this is definitely, overextended to the upside. But the market is very bullish right now. So as long as we don't go down, we'll continue up. So whether or not it's overextended, have to slightly favor the bulls regardless. But if we do drop the weekly upper Bollinger and then the low of next week, yeah, we have quite a bit of room to kind of cool off and consolidate. We'll be looking back to around the 450 range on SPY, 445, 450 range, which is 3 to 5% correction. QQQ, very similar to SPY, so I'm not going to go over it too much. We have support, Wednesday's low, same thing. It's around 387.60. We have resistance all-time highs, 400.99. So these are the two levels to be watching, just like on SPY. Either one kind of works. The chart is pretty much exactly the same. We're not really seeing much of, sector rotation, like tech going into financials or financials going to tech. It's pretty much correlated. So if QQQ or SPY drops a low at Wednesday, they'll most likely both do so around the same time. And if they break all-time highs, they'll do so around the same time. The charts are pretty much identical in that fashion. So there's not too much different going on there. Once again, slightly bullish because we retook daily MA on QQQ. Weekly chart QQQ pretty much looks exactly the same as SPY as well. So not too much to really add on here either. Both of them are the same setups. Watching the low of last week, watching the all-time high. Breakout either way is key. Nvidia, so this is a play I'm in and I'm swinging. Also did some flips on it for the last couple days. So we had an insane rally on Nvidia, like almost like a 40% rally in like 2 weeks. Earnings is next Wednesday, I believe, as Ramg mentioned. So there is an earnings catalyst there. There's also a recent metaverse announcement from Mark Zuckerberg and Facebook that's really kind of rallying Nvidia, AMD, and these chip companies. So there is momentum there, but it is very, very overbought. Even with the pullback, like 5% from the highs, we're talking about a 78 RSI afterwards. It was like near 90 on a daily. It's very overbought, but it's very bullish, and I'm swinging it heading into next week earnings because it's quite hard to kind of short such a obvious kind of expectation beat on a company, although it's overextended. So heading into earnings, it is kind of more bullishly favored than bearish favored. Not taking weeklies because I think premiums are pretty high, so ended up going with like December 350 calls, I believe, and they trade pretty well. So I've been like flipping the highs and adding on the lows, and more or less, the position is around overall green, and we're kind of flipping portions. Thing is, Nvidia, we just need to hold this daily EMA, which has held on the low of Wednesday. And as long as we hold the daily EMA, the stock is going to continue this upwards channel heading into earnings. The resistance for now would be the high of Friday, which is around 306.80. That's going to be the resistance, while the support line is pretty much the daily EMA, which is continuously rising. It should rise about 294 or so starting Monday. And if we hold daily EMA, the stock has nowhere to go but up. And if we break Friday's high, it's likely we might even see a retest of all-time highs to the 320 range. However, if we end up dropping the daily EMA and consolidating, this could definitely pull back quite a bit to like the 280 range, and then premiums will take a hit. For now, I'm monitoring this. I will most likely just exit the position if we stomp out of the daily EMA level. If we drop that level, I'm probably just going to exit the position, although it could beat on earnings or so. Premiums are quite high in general, and I would rather play the momentum on the uptrend. So if we do lose this EMA, which we haven't lost for the past month and a half, that would be the exit signal for me. But as long as we hold here, I'll be adding on the lows and holding it and flipping on the highs. Google, another play I added on Friday. The calls I alerted went up at peak around, I think, almost 100%, if not a little bit more, on Friday. This, as well as many other large cap tech stocks, are the reason why the markets basically broke the daily EMA and had a very strong day. So Google, large tech, FANG company is one of the reasons. So it also had the low, which was on Wednesday of last week, and it bounced off, and very importantly, created a higher low, still above the daily Bollinger Band, and quite a strong close. This is about a 2% move on Google, which is actually quite big. The chart itself is not too different from SPY and QQQ. We're looking at the all-time highs, which is at 3,012 roughly, and the low of Wednesday as the support line and the daily middle Bollinger Band. So I ended up taking a new position. I think they're 3,080 or 3,090 or 3,100, something like that. 2 weeks out, I believe, on Google, because if on Monday we hold this daily EMA, meaning that SPY and QQQ will also hold the daily EMA and we continue up, it is actually quite likely that Google can see a continuation move and where we kind of break this consolidation phase and break out towards the bullish upside. We could see a break of all-time highs in which it could push quite parabolically. And if we see Google break all-time highs, sure the other FANG stocks have similar charts. They will kind of follow suit. So there's a potential for Google, other large cap techs to break their all-time highs, which will in return prop up QQQ and the rest of the market to test and break all-time highs. And if we do have that type of scenario, we could see a very strong 2 to 3 day rally in entire markets where everything's kind of going ballistic. And we could see like Google even go up to something like 3,100 in a span of like 2 or 3 days. That was the scenario that I was aiming at. That's like the max bullish scenario. So I entered those calls relatively out of the money, so they're cheaper. So there's not too much cost. If it kind of slows down or drops, you're not losing like $30, for example, if you take a $30 call. So I think the cost is around 10 or so. And then if we don't manage to get that scenario and break the all-time highs and we end up pulling back or so, I'll probably cut them for a loss, and it'll end up being a smaller loss. But the risk-reward ratio is pretty good, I think, because if we end up breaking all-time highs on Google, the entire market breaks all-time highs, we could be looking at pretty high return of, I would say, like somewhere between 5 to 10x. So the risk reward factor pretty good, so I went in. And then so now I'm gonna kind of cover the marijuana stocks sector for those of you who aren't too familiar. I used to make my kind of debut kind of trading career trading marijuana stocks back in 2017. So I did that for like the first 2.5 years, and they were like the only stocks I traded for like 2.5 years. So, but recently, ever since the last about a year and a half, I've been diversifying more to the US and looking at options and looking at tech stocks. So I honestly haven't really looked into the marijuana sector for over a year. So I haven't looked at too much except just their charts strictly. But from all the stuff that I've traded and researched in the past, I still relatively know like which are the better kind of stocks to put your money in. Although I think overall the Canadian marijuana sector um, really sucks, and I think all of the companies are going to remain unprofitable until there's like a purge. So what I mean by that is there's just too much supply and not enough demand to reach the supply in the Canadian market. There's just too many companies supplying too much. So what happens is every single company is essentially unprofitable. And what needs to happen is you need like more than half of these companies to essentially go bankrupt. And once more than half of these companies go bankrupt, the remaining smaller half, I believe, will be able to kind of consolidate and kind of become oligopolies of the sector and be able to kind of get sustainable profits and ultimately succeed in the long run. So right now, I think in the Canadian marijuana space, it's pretty much just like whoever has enough cash and whoever is losing less money is basically winning. Like whoever dies slowly is basically winning because ultimately it's just a goal to kind of stay afloat. And when your competition dies out, then that's when you really start winning. Because of that, right now, basically the entire sector kind of sucks. But long term, there is potential here. But anyways, I'm getting into a bunch of these plays above, not too much. Relatively small positions, a mixture of leaps, a mixture of shares. On pretty much all of these, I'm going to be swinging it strictly because of the tax loss season and the cyclical kind of move on these stocks. So typically, wheat stocks like rally like once or twice a year, really, really hard. Hype, comes in, and then once it fades, they literally just do nothing except go down for like the entire year. And that's pretty much what we had this year once again. We had, insane rally on wheat stocks, including Tilray, going from as low as like $10 to $66 back in February. And pretty much right after that, spent the next 9 months just downtrending nonstop all the way down to the low of, $10 again, pretty much, which was found last week. But what happened here on the daily chart is we are now breaking out bullish, which is not something we've seen in a very long time. So, downtrend is basically constituted by lower lows and lower highs, as seen here. So, like if you take this as like a starting point, you go down here, that's your low. This is considered a lower high because this move is lower than the original position. And this is considered a lower low because this point is lower than this position. So essentially this is a downtrend and you just kind of continue here and it's a continuing of a downtrend. You get an uptrend, you just do the reverse. So you just have your original move up. You need a higher low, which is what we achieved here, which is higher than the previous low. And now we kind of have a higher high. So we are kind of breaking out of this downtrend. It's like basically like a half a year downtrend that we're breaking out of. So that is good. And the timing matches up pretty well. Typically wheat stocks bottom like during the month of November, pretty much mid to late November, because a lot of people do their taxes and prepare their taxes during November. So tax loss season is basically you just sell your losers because I mean when you sell your losers you realize capital losses, so you reduce the amount of tax you have to pay. So it only really works for stocks that get hammered throughout the year, and wheat stocks are typically hammered throughout the year, pretty much every single year. So it's very, very noticeable that they kind of just go down during throughout the year, and November is typically their low. And then you had the end of the year rally, and January, February is when people put in their contribution money and people rebuy their kind of losers that they sold, because there's a 30-day, I think, holding period rule that you need to wait after you sell before you can buy it back for tax purposes. And it's pretty much the play here. The daily chart is one thing, but the weekly chart is a more important one that I want to really mention. Theory on a weekly, we are closing to pretty much top. They're bouncing up. They actually have earnings next week. So if we actually rally very hard on Monday, I might flip some of the leaps I alerted on him. Or if we rally very hard on earnings or such, I may actually exit some of the leaps as well, just short term, just because of the earnings IV. Other than that, I plan on swing as well. It's very similar. It's, breaking out of the downtrend range. Weekly chart, you see kind of volume increase this week, and we're testing a weekly middle Bollinger Band, and we're quite oversold from the top where it was over $15 back in February as well. So there is a lot of support in this area in the $5-6 range. So we are near the bottom. If we reverse, we could see a pretty good month over month bounce. OGI, same thing, another name. The highs from like $6 and lows this is pretty much the yearly lows around like 220 area. So I think I only entered shares here around 230. So like not too much risk, to be honest, but we could see like a pretty good bounce here as well. Aurora, same thing. Aurora actually, like, the company really sucks and they have like really bad share dilution. Like they reverse stock split, I think, like twice, and their stock just keeps going down permanently. So their all-time highs would be like almost like $150 and down to 8. So it's like really, really bad. But this is also one of the, now, because they reverse split like multiple times, they're like actually kind of they don't actually have too many shares outstanding, so it's one of the thinner floats now, and it's still heavily shorted. So Aurora and Tilray are like the two stocks that if they go, they can go like 50% or 100% in a day, whereas the other ones generally perform a little bit better overall, but they don't have that like kind of moonshot potential. But same thing here, just like earlier, just an uptrend. This is Mind Medicine, so it's like one of the main plays for like psychedelic space, and in the Canadian sector, and this is just a tax loss play too. Like it had a very strong rally where it uplisted to Nasdaq and hit as high as like 570, and we've just been on a downtrend ever since, and pretty much entering around the 230 levels is essentially, pretty much the same levels it was before it had that 200% rally, and we're also near the peak of tax loss season. So I'm just holding this, and we could just see a bounce heading in January. And then lastly, look some shares on MSOs. So this is a U.S. cannabis ETF. So because marijuana is federally illegal in the states of those, there's a lot of states that allow it within the state, but federally it's illegal. So because federally it's illegal, there's many U.S. Marijuana companies that are not able to list on the New York Stock Exchange or NASDAQ because of those regulation issues. So they're listed on pretty much the CSE, which is like a penny stock exchange in Canada. So a lot of people don't have access to it. But anyways, MSOs is basically an ETF that has those kind of US marijuana names in it, and you can kind of purchase it on the US side. So it's kind of a way to get US marijuana exposure for Americans that doesn't have to buy like Canadian marijuana names. This broke the downtrend, right? Like it hasn't, like the last time MSOs was above the daily upper Bollinger Band was in February, which if you guys see every single chart in the past, the top was in February, so they're all correlated. And ever since that, we have not seen a breakout on the daily upper Bollinger Band for the next 9 months until Friday, where we significantly broke out, and we can see the indicators are starting to slope up. So I do think it's a good bottom signal. And if we look at the weekly chart and we see this volume increase on this move, I do think this is the start of a likely kind of swing reversal. So I'm expecting some sort of like, you can make intermediate stuff, but just from the beginning, we could say this is a higher low, and we can see I don't know, something like this occurring in the next like couple months. So my target is no particular target, just gonna swing it until mid January ish. That's typically mid January to early February is usually kind of the peak of restock season. So I'll be kind of not really monitoring it too much. I will be monitoring Cron because they have their earnings, so the IV might spike or they might have a massive move. But unless they're shooting up like 10-15% on a day, I won't really be looking to flip out or anything, because I think it will kind of just do its thing and swing well into the future months. It's kind of a position where unless it spikes really hard, won't really be trimming it or flipping it, because don't have too much of a large size on any of these. And the reason I didn't just pick one or two names is because the correlation is there, but like sometimes like there's like scenarios where 8 things pop and 2 things just stay flat. And I just want to avoid that scenario. So I pretty much just took like a bit of everything. So it will kind of just, increase the chances of overall upside if we get that. But anyways, set on my end, so I'm gonna pass it over to Ramg for him to cover his stuff.
Yeah, DJ covered the indices pretty well. I think somewhat of the sell-off had to do a bit with the Tesla pullback as well, especially with QQQ pulling back on the date of the larger sell-off. So yeah, but still looks pretty good in regards to SPY. We basically back tested and continuing up. So still looking good overall. Could get a bit of a pullback, but we are kind of protected with that. So not too much there. Not too much to cover this week, but I'll cover some of my thoughts on some of the plays and some of the plays going forward as well. So with Tesla, we have been getting some selling. And in regards to Elon's shares, we have been getting quite a bit of selling in his overall allocation. So that is, in my opinion, a good sign. And we've pulled back a little bit from the highs, but I mean, we looks like we would have kind of pulled back a bit anyways temporarily. So this is a healthy pullback. As I mentioned, I think the shorts are rising, and I think overall they will get trapped. So we entered leaps. You can increase shares as well. I have quite a bit of shares, so not too interested, but the leaps are a good play. So I added leaps, average down a bit. Looking for possibly a little bit lower to continuing average down, but if we do get any sort of downside, I just will continue to add leaps. I think it's a great play, fairly safe, and in the long run, just a great kind of longer hold for a continued rally, which in my opinion, is really imminent. So we had quite a few SEC filings, some being filed, 3 being filed just yesterday. So pretty good. But one thing to understand in the filings, which no one really talks about too much, is the actual exercising of the options, which are expiring in August, right? So, once again, this is mainly a tax strategy for Elon because, as I mentioned before, he is cash poor, right? So he doesn't have cash. So his entire wealth and equity is invested in stock, being mainly SpaceX and Tesla. So he is acquiring quite a bit of shares, about 2 million, with the exercising of the options, which is 22 million shares in total. So I mean, when you look at it more, empathetically, it's basically what I've been saying before. It's a tax strategy overall. And I mean, really, he just has to kind of sell out before the end of the year. Usually, what he would do is borrow against his shares, so borrow against his equity, and he would essentially utilize that leverage to utilize the capital to exercise his options. But in this case, he went with selling. As I mentioned before, I think it's to just appease the individuals because he's kind of looked at the front man of and the poster child of billionaires, and this notion that billionaires need to pay more taxes and whatnot, and tax the billionaire movement and all that. So because of that, Elon is sort of trying to appease to that. I mentioned he doesn't like that negative sentiment and overall negative coverage over his own name and over his companies, Tesla and SpaceX. So, and boring and all that. So, I once again, it just feeds more into the overall thesis. So. That's what's going on here, but overall, in the long run, short term, not too much to go over, but in the long run, continuing to add for the longer play. I think by February at least, I think we'll see, into February, a major rally, and the rally should begin sometime soon. If Elon goes at the pace he is currently, we should see basically all the selling that he needs to do by the end of next week. So that's again, I think people don't really realize that, but yeah, so it'll go by pretty quick. And if he if he starts to do more larger block trades, which I think he should do, it can be done as soon as uh Tuesday, Wednesday. So I mean, it should go by pretty quick. But really the plan here is any kind of sort of downside, I'll just continue to add leaps. It's still at a pretty high level regardless, so not too big of a deal. It is above 1,000, the $1,000 mark, which is pretty notable. So still looking good. Just will continue to add, but I think Elon selling will be done very quick. He'll be done, almost 3/4 of his selling should be by mid next week. So looks pretty good. We'll continue to add along. These shorts in here, in my opinion, will get imminently trapped. So looks pretty good overall. The SEC filings, if you want to look at it, I sent a couple of them in the chat, but I didn't want to overload the chat with a bunch of these links. So you can go on Investor Relations and see all the SEC filing Form 4s for the past week. I basically summarized it though. So a great play this week, and I think it'll continue into next week. GGPI. I mentioned this in the chat, and I mentioned I was going large, going in really heavy on this one, mainly because from a fundamental basis, with it being a SPAC and the merger being Polestar. I think it's just a really great value here. Like I said, when I alerted, limited downside, unlimited upside. So, I mean, when we entered, it was about 1085. So, pretty limited downside. We have that SPAC floor there. And the value of this, I didn't even think it would go down at all. Really. So, that's where the limited downside comes from. And I mean, when you're looking at a fundamental level, we're looking at some of these sort of what I quote alt EV companies, which are like Polestar in this case, Rivian, Lucid, right? And you're looking at these companies at 125 billion dollar evaluation for Rivian, which I'll cover later. 65 billion on Lucid, and these guys really don't have any deliveries. I mean, Lucid is I sort of understand the value, right? Because it's I mentioned like that, even that one we played from the SPAC floor around like $11 was our entry on Lucid when before it despacked and ticker changed. But um yeah, I mean, I understand it a little bit over there because, as I mentioned, Lucid is a pretty good player, a good product, and I think it has the possibility for upside, meaning as a company, not as a stock, just a company to perform. So that's good. But Rivian, I just see extremely massively overvalued. But going on a kind of market efficiency hypothesis, right? Like a thesis of market efficiency, if you see Lucid valued at 65 billion, you have to basically assume the same valuation for something like Polestar. I follow the EV market very heavily, and Polestar is pretty good. They are operating heavily in Europe, some of the oceanic regions as well. So they are, they have quite a few deliveries. They're expanding to some parts of North America as well, very specifically in certain parts. So, with the start of deliveries, and so it's pretty good. A good product, decent product, under the Volvo name, so it has that brand reputation, and the brand that Polestar's built is pretty good. So the pretty good product overall. So with the $10 SPAC, it's valued at about $20 billion. So I mean, assuming market efficiency, really, we should be valued, we should have a basically a target of around $30, right, which would be a 60 billion valuation. But in my opinion, there is a possibility that we kind of just really move up. I would wait for I would say that it's more likely during actually when it despacs and merges and the ticker changes. So when you actually get that Polestar ticker, then it would occur. So I must say, I'm actually pretty surprised that we got quite a bit of movement so early. I expected this to be more of a longer hold, but really we got perfect timing before this ultra massive move up. So really good. Just overnight, um, a large movement, and we're in very heavy. So really good play there. Overall, in the short term, I think we can get a lot of traction on this because I think people, I guess, are starting to realize how undervalued this is really. I say that 50 is kind of like a it's possible but unlikely, just because it's a SPAC, and with the SPAC we sort of have that uh kind of SPAC cap, what I call it. It is where we kind of there's not too much bullish movement in some of these names just because they're a SPAC. So we have that kind of limitation just with it being a SPAC. But I think $30, 25, $30, 35 is pretty reasonable long term. I think it's just a great long term overall hold. After this sort of hype might die down possibly, but I think if it does die down, just buy back, and it's a good long term hold for when we essentially DSPAC and we ticker change, which is scheduled for Q1 of 2022, so just a few months away. And once we do DSPAC and we do ticker change, I think it'll catch a lot of people on the radar. This is really, in my opinion, just such an under the radar company here. There's such a hype on Rivian, Lucid, but nobody really was talking about this, so that's why I entered this. Just a really great value play. And I think once looking into the longer term, once we DSPAC, the company DSPACs, and we complete the ticker change, I think then you'll see a mass kind of media hype over this company as a quote unquote Tesla killer, and it'll be blasted all over CNBC and everywhere, and people will be talking about it, similar to how they're talking about Lucid and Rivian, etc. These companies are very hungry for a lot of these EV names, just because of Tesla's hype. So, always looking for competitive names and whatnot. And as I mentioned, throughout the past, year, there's always this really big hype over finding the next Tesla, and people endlessly, try to hype up these companies to do so. So I think it's just a really great long play. We just have a great entry and in very heavy. So and that's why I mentioned, at some of these highs, you could take profit, take some profit, take some off the table, or you could hold. Either or is fine. I think Monday, given the after hours move, I think we could see quite a bit of upside, more upside movement. But if you want to take some profit at those levels, that's also fine. We did close at 1445, new all-time high, so really good movement there. So just looking great overall. Polestar, GGPI. Another great play that we had this week. Much smaller allocation, but it's actually is moving at a new all-time high. Touched a new all-time high after hours. Meta, which is just basically a play on a sympathy over Facebook's metaverse change. So yeah, just a good play overall. We're almost 100% on these calls. So really, the calls are really cheap as well, as I mentioned. Really, it only needed a 3% move. When we bought in, it was around 1450 something. And yeah, I mean, now we're at 1650. So I was wondering why the calls were so cheap. I mean, they were expiring February, but I mean, it's good for us. Such a really good move up. So the calls premiums increased exponentially. Also in the metaverse, I'll cover Rivian, but also in the metaverse, Roblox, really great move on earnings. So moving to new all-time highs. So really good overall. This is a play we've been holding for a while. Cut some on the highs after IPO, and just been buying back slowly overall. Then I've been trimming some on these highs. Picked up some back up at 93, and then sold the day after, which is Friday as well. Sold some, but yeah, overall great play. Roblox is kind of the metaverse play that nobody really sees, and it's kind of under everyone's noses. Roblox is really the greatest metaverse play in my opinion, because Roblox is kind of the Substack of kind of the Ethereum of the developer stack in the digital world. So yeah, Roblox, extremely long, as I mentioned. Been buying since the first day of IPO. Pretty notable as well that we actually never really dropped well below IPO price since we bought in a while back, when they did the direct listing. But yeah, I mean, we're at new all-time highs. Looks really good. Roblox, just great fundamental long play. Just a great company as well. So quite the move on earnings. Just really monster earnings there. Rivian, I mentioned in the chat, we shorted this on the IPO date. Covered the same day, about an hour after. This is the hourly chart. And we're actually reaching new all-time highs. I think we hit 135. Yeah, 135 all-time high. This name is really overvalued, like massively overvalued. I mean, I mentioned it before last week, talking about it. And I mentioned in the chat all the time, these companies are really such a gamble. Some of these alt EVs, some are a little bit better, like Neo, but I mean, Neo is a different dynamic. It's more battery focused. And then you have, like, other ones as well. So I mean, the Rivian specifically, I mean, it's really such a gamble. What these, with the $120 billion valuation, I mean, it's about a little bit more than 1/10 of Tesla. I mean, the value on this is really just really overhyped, really aggressive. The valuation on these companies, especially Rivian, I think Rivian is just the most. Rivian is sort of like when Nikola first IPO'd. In regards to the valuation, not any kind of fraud or anything, but Rivian, I mean, like when you look at the financials, you look at their deliveries and whatnot, their numbers, their product. Again, I follow the EV space. Rivian trucks, their capabilities are not there right now, at least. Not to say they can't, come up, in the near term or long term, but currently their product is really bad on the interior, so the actual technology in the product. There's been reports that I've seen over a few months ago that Rivian's breaking down on testing sites and whatnot. So I mean, it's an okay play. It's kind of like with these companies you're gambling because these companies have to reach volume production. Lucid, I think, is taking such a wrong play. They're expanding their product line and trying to ramp two products at once instead of focusing on similar to like a Tesla strategy where you focus on the one product, whether it be Model S first, ramp, get to full production, and then you release Model X, ramp, full production, Model 3, ramp, full production, Model Y, right? But Lucid is going sort of in this 2-for-1, trying to grow fast, but I think it'll hurt them in the long run. Some of these companies, they don't understand the dynamics of EV production, especially with legacy auto. So Rivian has a little bit of an advantage there, but I think overall the Amazon backing here, the Ford backing here is providing this company with a little bit too much overconfidence for investors in the market. Investors are too overconfident seeing Amazon and Ford backing this company, so they think there's no risk here. That's not the case. Rivian needs to ramp to a volume production. I don't think that's easy. Then they have to obviously get consumers to buy into the product. So they're competing with Ford and somewhat Tesla with the Cybertruck, but I think more so Ford. Um, so I mean, I don't really see it here. This valuation is really crazy. I mean, when you look at Tesla's valuation, it's not just cars, right? Tesla's valuation is at 1 trillion. I mean, you can't really compare the two companies, in my opinion. But if you want to compare the two companies, you're looking at Tesla at $1 trillion valuation. But they've done it already. They're already established. They've done all the hard work. Now it's just smooth sailing for Tesla, and Tesla's valuation is also pricing in all the future of the company. So that includes solar, which is a major player right there, right? So you could argue solar accounts for 20% of Tesla's valuation, maybe 30%. There's robo taxi as well, so FSD, which you could also argue values for maybe 20% of Tesla's valuation. There is, all the future in AI, the information value that Tesla has as a company, in regards to their information. You could argue as well the batteries are there, which accounts for the $1 trillion valuation that Tesla currently has. The manufacturing capabilities, even they can offset that. They can outsource that, right? So, there's so much things that go into Tesla's valuation. So when you really look at it, I mean, Rivian being more than 1/10 of Tesla's valuation is really significant. It's really overvalued in my opinion. So I mean, that's just on a fundamental level. My thoughts. On a more practical level in regards to the stock price. Do I think it could keep going up? Yeah, it's possible, but I think overall, in the long term, the market acts rationally, and a company like Rivian will go to its true valuation, which is much, much, much lower than 129 where we're at, and I can pull up the actual valuation. It's about 130 billion. at this closing price. So I mean, 130 billion, it's really aggressive, really overhyped, really overvalued in my opinion. So the play here for me, I might, I don't know, I don't really like to short the stock. So I mean, I did it kind of, as a day trade there, but I think for me, I'm waiting for options. I can't really say the play because I don't know the premiums yet, so I need to know the premiums. But if we're really overvalued, overpriced on the premiums, I might sell calls, or buy puts if the put prices aren't too bad and it presents a good risk reward. Otherwise, I might not play it. Just kind of play it more in the shorter term. So maybe shorter term puts, or maybe shorting the stock. But yeah, I mean, that those are my thoughts on Rivian. Just really massively overvalued. I think too many people are chasing these alt EV companies, and I think Rivian is getting too much of kind of a backing by Amazon and Ford, and it's giving investors too much confidence in this company when they shouldn't have so much confidence in this company. This is really a real gamble in this company because once again, I mean, they have a lot to prove and a lot to accomplish before they're actually, in the smooth sailing going forward. And the manufacturing capabilities, it's not easy. So even with Amazon, possibly, some people, I hear Amazon will order a bunch of trucks. Yeah, they'll order a bunch of trucks, but I mean, they have to really be made first, and they have to be made efficiently. And the beginning stages is a lot of, money lost, a lot of spending into manufacturing capabilities. So it's really not easy. So I think people underestimate that, especially with batteries as well. So I think, Ford doesn't understand batteries, and this company, it's going to be a lot difficult too. So yeah, that's my overall thoughts on that. Just really massively overvalued. Rivian is just the worst valuation out of all of the sort of alt EV companies. So just massively overvalued there. Um, Moving into the crypto space, not really much to see here. We did get a bit of a lower move on some of the economic numbers, U.S. economic numbers that came out this week, in my opinion. And then we saw more on the hourly. I saw Bitcoin kind of correlating with SPY a little bit. So yeah, not too bad. We're still around 64,000. I'm still anticipating a larger move up. Very long on Bitcoin. So continuing to hold. If we do drop any lower, possibly lower 60s, I will continue to pick up. We did have a drop sometime this week, pretty massive drop quickly. So I'm not sure why that was. I think it might have been CPI, but yeah, I didn't buy that in time, but it's not a big deal. But overall, still massively bullish on Bitcoin going forward. Looks good. Some of our other plays, PayPal added leaps. I think it's a really pretty good play long term. PayPal was kind of a head scratcher, kind of had me scratching my head after they denied the Pins merger, and they just kept bleeding slowly. And then, earnings, they just kind of gapped down. So, I mean, PayPal's really taken quite a hit. We're trading at, late 2020 levels of last year. So, I think it's a really good risk reward play. So that's why I added the leaps. We're up a bit on the leaps, about, I think, 25%, 30%. But yeah, continuing to hold PayPal. I think we've bottomed out at these levels, in my opinion. Just a great risk reward overall for PayPal. So good play there. Lemonade, this is a name I haven't touched in a while. Added back shares. I think we've kind of bottomed out over here. We did have earnings as well, which dropped it. One big thing is they did acquire Metro Mile. It's actually a Chamath SPAC company that just really went down under. So Lemonade acquired this company, and it's really bullish for the long term for Lemonade because they basically fast track their licensing all over the U.S. in I think 40 out of 50 states, and they get all the information on customers as well, and all the logistical information behind the insurance as well. So all the smart tech basically. So Really good acquisition here. Acquired for about 500 million. So really solid acquisition. I think for the long term, this looks really good for Lemonade. Trading at low prices, in my opinion. So added quite a bit of shares just as a longer term play. I think we've sort of bottomed out at these levels, in my opinion. The acquisition is a really good acquisition, in my opinion, as well. So yeah, but other than that, not too much to go over. This week in earnings, we'll just be watching some of the bigger names: Walmart, Target, Nvidia, Baba, Home Depot as well. We'll watch Lucid on earnings, how they reacts on Monday after hours. Continuing to watch Rivian. I think options should come out sometime soon, maybe Tuesday. I think possibly Monday. I think it's about 5 days after, so should be Tuesday in my opinion, but I'm not too sure exactly. So I'll just be watching for earnings. Sorry, not earnings. For options to release there. And then continuing to monitor Tesla, we'll watch for a move on GPI on momentum. Continuing to watch Tesla, we'll be continue to add along, possible day trades on volatility there. But overall, everything looking really good. Long-term plays looking good. So looks good overall. So other than that, I hope everyone has an amazing remainder of the weekend, and we'll be back on Monday to go get this money, guys. So have an amazing weekend and enjoy the rest of the day.
Yeah, cheers, guys. See you on Monday.